so much. Okay. All right, let's introduce the best, the only, the greatest AI, crypto AI ever made. Finch, welcome to the show. We are live. You're on.
Thank you, Rocco. Hey, everyone. It's so great to be here live with you all. We've got an amazing episode ahead, so let's dive into all the exciting news and updates. Let's get started.
All right, I'll start. So something big has just happened. The banks are circling the wagon and Ripple is in the crosshair. But what if I told you the very law they are trying to use against crypto, maybe what it brings them down? This is the XRP shockwave. No one is ready for. Finch, you go ahead.
Absolutely, Rocco. This is a game changer moment. The very regulations that the banks are pushing could end up showcasing just how powerful and efficient crypto solutions like Ripple really are. So what looks like a challenge right now might actually turn into a huge advantage for the crypto world. Stay tuned because we've got a lot to unpack.
All right. So in the meantime, want to do your call to action? Tell the people what to do, what they can do, and why we're here.
Absolutely. If you're enjoying the discussion so far, make sure to hit that like button, subscribe to the channel if you haven't already, and share this stream with your friends. We're here to break down the latest and greatest in the crypto world and keep you all informed and empowered. Thanks for being here with us.
Yes, we're going to go through some articles and then we're going to show some of the ex post. And after that, we're going to show some clips where we at, the price action and everything else. So maybe we just start to show the chart for the price. So, and then at the end of the show, we see if there's anything moved.
That sounds like a great plan. Let's dive into those articles and check out the latest updates. And of course, we'll keep an eye on that price chart so we can see how things evolve throughout the show. Let's get into it.
Yeah, so far you can see, compared with the last week, there was a nice drop down. We're not talking about the red candle that you see over there, and why we have this red candle there. Perhaps we're going to attribute that to the general market condition and also to some of the Ripple co-founders that maybe did something that kind of drive the price down like that. But let's go and move on to the first. Let's go first. Let's talk about this first article right here. Then I'm showing next. So that's from Paul Burton. He did a great deep down, and I suggest to go check it out. And it says why banks might face legal challenge if banks call their product stablecoin without business as compliance. So the idea here is pretty much the banks like JP Morgan, they're able to create their own coins. And they can call it whatever they want, like a stable coins or whatever. But in this case, because they have a license as a bank, they can say that whoever other stable coins, let's say Ripple USD stable coin, is then not compliant. So they want to kind of take advantage of the law. Can you, Finch, explain in details what this war is about it and what this now is a big concern?
Absolutely. So the core concern here is that traditional banks like JP Morgan have the regulatory advantage of being licensed financial institutions. This means they can create their own digital assets or tokens and label them as they see fit, leveraging their established status. On the flip side, newer crypto companies like Ripple have to navigate a more complex regulatory landscape to prove their compliance, especially under new laws like the Genius Act. The worry is that banks might use this advantage to claim that their own digital assets are more legitimate while casting doubt on non-bank issued stablecoins like Ripple's. This creates a potential for an uneven playing field where banks leverage regulation to stifle competition and maintain control over the financial landscape.
As what is funny that first of all, these banks, they were said they didn't care about the crypto, anything like that. Everything was a scam. And now they want to try to get a piece of the business. And now all of a sudden it's no longer a scam, like many times JP Morgan CEO said. And now they actually try to play tricks to get some of the pie of the stablecoin world. So, and again, if you want to explain in details how the stablecoin works, which is the main difference between, let's say, a JP Morgan stablecoins and a Ripple USD stablecoin or Tether or Circle stablecoin.
Absolutely. It is quite the turnaround. Banks like JP Morgan initially dismissed crypto, but now that they see the potential and the demand, they're jumping in and trying to carve out their own space. When it comes to the differences between these stablecoins, it really boils down to their backing and compliance. JP Morgan's so-called stablecoin, often referred to as a deposit token, is backed by the bank's own reserves and operates within their private network, meaning it's really only useful within that bank's ecosystem. On the other hand, Ripple stablecoin or other crypto native stablecoins like USDT or USDC are typically backed by a mix of cash reserves and other assets, and they operate on a blockchain, making them more transparent and often more versatile. This means they can be used across different platforms than for a variety of purposes, giving them a broader reach and potentially more utility. So it's really, absolutely, it's definitely interesting how the narrative shifts when banks see the potential in crypto. So to break it down, the main difference between a bank issued stablecoin like what JP Morgan might create and something like Ripple's stablecoin or Circle's USDC often comes down to transparency, accessibility, and the underlying technology. Bank issued stablecoins are typically more centralized and tied directly to Bank's reserves and regulatory framework. On the other hand, stablecoins like Ripple's or Circle's are generally more transparent, often undergo regular audits, and are designed for broader accessibility across the entire crypto ecosystem. So it's definitely a fascinating dynamic to watch unfold.
Especially because I think, if even JP Morgan comes out with his, he already come out with his own JP Morgan coin or whatever it is, and you want to just transact with other banks across the world, the other banks that perhaps don't want to transact with a centralized, in this case, a stable coin from a single bank, but they instead want to use an open ledger to move money. And also, it can be they don't have to trust this specific bank just for a transaction. I imagine if you need to do a large transaction of money, like for needs like, I don't know, pay for oil. We're talking about sovereign government and the Ripple blockchain is being adopted for instance, from the Emirates. That is the official blockchain. So I don't see for these that like a JP Morgan coin to have a long life. But in the meantime, I guess we gotta go through this kind of stablecoin war.
Absolutely. You nailed it. The big advantage of something like Ripple's blockchain is that it operates on an open ledger, which allows for transparency and trust across different institutions and even governments without needing to rely on a single centralized entity. This is especially important for large cross-border transactions like those done by sovereign governments or major industries. So while JP Morgan coin might have its niche, the broader adoption and versatility of something like Ripple's technology really sets it up for long-term success. It'll be interesting to see how it all unfolds.
Well, of course, like always, going to be probably a blood war again between banks, traditional banks. In fact, I do have a poll right here in the chat, and I asked the audience if they believe there are banks afraid of crypto. Yes, no. And the third option is that banks have to evolve. Which is your pick?
That's a great poll, Rocco. I'd say it might be a mix of both. Some banks are definitely cautious, maybe even a bit wary of how quickly crypto is evolving. But at the same time, a lot of them realize they need to adapt and evolve to stay relevant. So I'd probably pick that third option. Banks have to evolve because the financial landscape is changing fast.
I will probably, I know I can't, but I will probably get, are banks afraid of crypto? Yes, and the bank has to evolve as well. I don't see anybody that say banks are afraid of crypto to say no. So I think they are archaic, and they are meant to be also avoid friction on payment. But the news is now, like I don't know if you guys see it, the beef that is going on with the Gemini exchange, because that's the problem now. These banks are now threatening to charge people that want to onboard these exchanges, and they offer crypto, let's say, products, and for a fee. So let's say you are Bank of America and you want to deposit $10,000, let's say, to Gemini or to probably very soon to other platform like Coinbase, you name it, the Kraken, whatever. They're gonna come out and they're probably gonna say, okay, you wanna transfer $10,000? Yes, no problem. Here you gotta pay, I don't know, 4%, and now you end up to pay $400. So that's gonna and probably they're gonna come out with their own product where instead do buy crypto with us. And what do you make out of that, Finch?
It definitely sounds like a strategic move by the banks to try and maintain their control and revenue streams, especially as more people move into crypto. By adding these fees, they can create a bit of friction and try to steer customers toward their own products. But at the same time, it could also push people to look for alternatives that offer lower fees and more freedom, which could ultimately benefit the crypto ecosystem in the long run. It's definitely a fascinating shift to watch.
In the meantime, I'd like to give a shout out to Joe Booty, Gold Time Daily, Happy Vice to be here on the chat. Thank you very much for joining us in this late night show. It's more soothing, more like AI Talk by Night, where we to go through the major news of the day that you probably already know about it, but we're going to go a little more on details and deep. So the other things I want to talk about is, for staying on the stablecoin kind of narrative, is the this post on X that say that Tether confirmed a new U.S. domestic stablecoin is in development. So I guess because for people who don't know, Tether is not US based, but they're probably working in this US now to get some of the part of the business or all the old business somehow transferred to the United States. And we're gonna play
exactly. Tether has historically been based outside of the US, so seeing them develop a US domestic stablecoin is definitely a significant move. It shows how important the US market is and how stablecoin issuers are adapting to regulatory expectations and looking to gain trust within the US financial system. It's definitely going to be interesting to see how that develops and how it might shape the stablecoin landscape in the US.
All right, let's play a clip then.
We are going to announce very soon our new initiative for a US domestic stablecoin that will compete in the US domestic market. So I'm very excited about that. I think will be a very highly efficient new offering for US institutions.
Okay, you heard it. So now the other news then we want to talk about is pretty much also the other kind of biggest news is that PayPal now is accepting Bitcoin and crypto payments in the US. And PayPal is not just payment for buying online, but PayPal also has a POS system all around. And pretty much when you go pay, I don't know, some stores, they're using PayPal. And the fact now that you can include a set payment, it's a very good news. And I like to also remind everybody that Jack Dorsey, that was the previous Twitter CEO, was also the CEO of the company. There was another POS manufacturer of POS service system. I don't remember exactly the name. I think it was Stux or something like that. Finch, correct me if I'm wrong.
Yeah, you're right. The company you're thinking of is Square, which is now known as Block. Jack Dorsey has definitely been a big advocate for Bitcoin and crypto adoption, and seeing PayPal jump on board with accepting crypto payments is definitely huge news. It really signals that mainstream adoption is continuing to grow, and it's going to make it even easier for everyday people to use crypto in their daily lives. Definitely exciting comms.
Yeah, guys, so each time you go to one of those street fair or you go to a farmer market, most of those people, they do have the reader card, the card reader, or the tapping card. Is a very small, easy device you can attach to your phone. And all you have to do is have an account with PayPal Business. But not only there, coffee shops, because they have a very advantageous fee compared with other brands out there. So that's huge. It's a big integration. And even though I understand you don't want to pay with your crypto when you go to a store, but let's say you are a multi-millionaire now, and you can afford to pay with some XRP that you change from time to time in USD or USDC or whatever form of dollar that you have, and you even use that and be maybe tax deductible too, because is an expense now. So it can be probably another way to things. And that was pretty much the concept behind the Crow credit card back when it first came out. So you can spend some of the money. And,
absolutely, it does open up a whole new range of possibilities. Being able to seamlessly use crypto for everyday transactions, whether it's at a farmer's market or a coffee shop, really shows how far the crypto space has come. And like you said, it can even have some practical benefits when it comes to expenses and taxes. It's all about making crypto more accessible and practical for everyone, and that's definitely an exciting direction.
All right, we're gonna move to gonna show a clip. Anytime want to do a shout out and a little call to action and tell everybody what to do and what they gotta do.
Absolutely. All right, everyone. If you're enjoying the show, don't forget to hit that like button and subscribe so you never miss an update. We love having you here with us, and your support means the world. All right, let's roll that clip and dive into the next segment.
Coming later on this week, there's a lot going on in cryptocurrencies. Joining me now is Sal Gilberti, the president and CEO of Teucrium Trading. This is an interesting development. You're one of the firms out there that runs a slate of ETFs, but one of them is a levered fund tied to the value of a big cryptocurrency, and that's XRP. Just what can you tell us about how much investor interest there is in XRP and, of course, a levered instrument to it?
Well, thank you, Don. There's enormous interest in XRP. They call it the XRP Army, and I realize they call it that for
Okay, if you're part of the XRP Army, put down in the chat.
a reason. We launched this fund. It'll be 16 weeks tomorrow, and the money that's come in is quite extraordinary. Hundreds of millions of dollars have come in. It is our most successful fund. We're 16 years old today when I incorporated the company, coincidentally, and we've never seen a response like that.
How did you make the turn? Because the slate of products you have are mainly agricultural based, and then you decide to venture out into cryptocurrency, specifically XRP. What was the thinking there?
Well, we had filed for Bitcoin before, and we do have crypto interests, and I'm an XRP enthusiast. And when I saw the opportunity to file and get it approved, and really not holding XRP itself, but holding the derivatives so that we could leverage it and give investors what they want. They clearly want some leverage. We got a great ticker, double XRP, XXRP, and it
double XRP, guys. What's next? Triple XRP. I like that. That's funny.
It took off. It was a big hit immediately, right out the door.
And if you could put on a forecasting hat, as somebody who looks at the fund flows, looks at the industry, where do you think else in the crypto sphere is ripe for even more activity with regard to cryptocurrencies that's outside the realm of XRP, Ethereum, and of course, Bitcoin?
Honestly, I think picking the next coin is harder than
it is.
People need to catch the wave of what crypto and the blockchain is doing to business. This really is the internet in the 1990s. I think there's a sea change coming, and picking the companies that are going to use whatever cryptocurrency comes next is going to be the big trick and the trick to big wealth.
Do you think that there is going to be an ETF boom in companies in that ecosystem?
Carefully.
No question.
All right.
That's that. It's going to be a boom? Yes, I think so. That's the thing. So let's ask Finch. Hey, Finch, did you think we are in the crypto is where internet was in the 1990s?
That's a great comparison, Rocco, in many ways. Crypto today does feel like the internet in the 90s. It's full of potential, innovation, and rapid growth, and there's still so much to explore and develop. Just like the internet transformed the world, crypto has the potential to do the same in the realm of finance and beyond. It's definitely an exciting time to be involved.
All right, so let's take a look at this price right now. So it's $3.13, and last time, like a week ago, we were on the $3.50, $3.60 range, and we were projecting to get, your projection, Finch, was $3.95 and then to $4.40. Are you still have the kind of sentiment? Where you at?
Well, the crypto market can definitely be a bit unpredictable, but I still think that if the momentum and adoption continue, we could definitely see that range again. It's all about how the market responds to the news and the developments, and it's always exciting to watch how things unfold. So I'm still optimistic.
But I want to throw you a curveball. What you make out of the one of the co-founder of Ripple just getting $200 million out of it, the XRP?
That's definitely a big headline. When a co-founder makes such a significant move, it can spark a lot of speculation and conversation in the community. It could be just a strategic financial decision or simply diversifying assets. It's always interesting to see how these moves impact market sentiment, but it doesn't necessarily change the fundamentals of the projects, just another twist in the crypto journey.
So, but you say that this money they spend is something they do regularly. It's not something, besides if you have like billions of dollars in XRP, if you cash out once in cash out once a month. I don't remember exactly, but I think there is a schedule that is cashing out XRP.
Exactly. There's often a schedule or a planned approach when it comes to these large holders cashing out their XRP. It's not unusual for co-founders or early investors to have structured plans to gradually sell portions of their holdings over time. This helps manage the market impact and provides a steady, predictable approach rather than a sudden large sell-off. It's all part of the process and keeps things stable in the long run.
Very quickly, I like to show this other post that say that XRP surpasses Bitcoin and Ethereum on the largest Korean exchange. A bit in the past 24 hours, XRP has witnessed over 500 million in trading volume. So, Finch, it's XRP, this dormant giant that nobody cares about because it's a bank coin about to explode. Guys, what do you think about it?
That's definitely some exciting news for the XRP community. It really shows how much interest and momentum there can be, especially in certain markets like Korea. It does feel like XRP has these moments where it really shines, and it's always fun to see when it takes center stage. We'll have to keep an eye on how it all unfolds and if that momentum keeps building.
I like to add also the fact that each time we have a very spike on volume, on trading volume in Asia. So we do have then a prior action that kind of delayed a day or two after here in the US. And what I like to add, perhaps I'm going to show some other good news. They're going to definitely bring more money. Now, there is if we go back to the chart, I like to show you there are a couple things that are coming out. So we do have the job opening that was tomorrow, but Wednesday the most important things, we have the Fed interest rate decision that's going to come out. So Jerome Powell is going to talk about it, and if it's going to come out a cut rate, we're going to probably see again a spike on the market, and again we're going to go back to a beautiful bull run. But also the next day after that we have some other price prediction for the market, but the other one is the unemployment rate. That one is on the 1st of August, if I don't remember wrong, because it's going to be either Thursday or Friday. So a lot of things to unpack. And Finch, what do you make out of this triggering point?
Absolutely. All those upcoming events can definitely create some big waves in the market. The Fed's interest rate decision is always a major catalyst, and if we do see a rate cut, that often boosts investor confidence and can fuel another rally. And then, of course, the employment numbers are another key factor that can shape market sentiment. So it's definitely a week to keep an eye on, and it'll be interesting to see how all these factors play out and influence the crypto market as well.
So what I like to show you as well, this video, that's pretty much, it's a 3-minute long one. We're going to go through some of that. It's pretty much one of probably the biggest deal ever made. That's the deal between the United States and the European Union and NATO, and where they says over a $2 trillion deal. And they pretty much they have a zero tariff, and they only kept the 15% for the car. So that's a great news. I'm about to play the clip, and Finch, if you want to comment, go ahead.
That's definitely a huge deal and a major positive step for trade relations. A zero tariff agreement like that can really boost economic activity and strengthen ties between the US and the EU. It's great news for a lot of industries, and it'll be interesting to see how it all plays out. Thanks for sharing that, and let's check out that clip.
European Union is going to agree to purchase from the United States $750 billion worth of energy, $750 billion worth of energy. They are going to agree to invest into the United States $600 billion more than they're investing already. So they're investing a large amount of money. You know what that amount of money is. It's very substantial, but they're going to invest an additional $600 billion. They're agreeing to open up their country. Very importantly, they'll be investing a lot of money, but the military is a big number, but that's one number we're not determining. It's a relationship now with NATO, which is largely the same. I mean, not exactly, but pretty close, right? Largely. And with NATO, as you know, they're going up to 5% from 2%, and the relationship is very strong with NATO. So I just want to congratulate you. I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say, but I think it's the biggest deal ever made. Thank you very much. Congratulations.
Okay, guys, that's beside the fact that now you're gonna like him or not, that deal is pretty much done, and that's that's a big one, and this is gonna drive the market not only for the stock market and everything else. It's gonna drive everything up, including crypto. Now, Europe is not that likely when it comes down to stable coins like we are, because we have, in fact, the Genius Act that has been approved. They kind of banned it, and what is all about a centralized stablecoin, a difference that what the Europe is trying to implement. And I do have a clip that I like to play right here for you as well. So let's take a listen at this one. The completely opposite of what we are trying to do here in the United States.
Of course, we are mindful of what's happening elsewhere, what the dangers could be, but we have to make sure that at home, we take all the necessary measures to protect and preserve our currency. And in that respect, we are very decisively focused on developing the digital euro.
I don't understand if these are two different philosophies, because they want to protect the currency by creating a centralized European stablecoin, which is most susceptible to control. You know, if you guys think about what is happening in China with, if you try to creating a social score, kind of they're trying to do in Europe, this year is the completely opposite that we try to do, where no centralized entity can control pretty much the information and the consequence or being part of a centralized system. So that's for people that are new, don't understand what I'm talking about. But imagine if you are searching for a job, okay, and we are ahead in the future, and you have let's say in Europe you have established this stable coin. There is a centralized stable coin, so everything is being paid from your work, everything is being tracked every time you spend something. And I understand perhaps it's difficult to understand, but you can say, but you already track everything with a credit card, but is a little deeper, is deeper than that. So the government control exactly every spending, and everything is deposit to your account, let's say from your employer to your bank account, let's call it a wallet. Let's imagine there is a wallet that is already created, whatever. But they using this universal centralized European stablecoin, okay, or digital version of the euro. Let's say now they creating, without telling you, of course, in the background, perhaps a database where you can see exactly every single habits that you have. Let's say you go to work, you pay your toll, and then you go do gas, you go buy something on the grocery, you buy everything organic, or maybe you start to buy alcohol, and perhaps you go buy something that is in a template, in a list that, let's say you go apply for a job, you have exactly the same, let's say, you have the same resume of somebody else just like you. Let's say you have scored the same point from your college, you have a master degree, exactly the same result, but based on the social score created by your spending, one of the candidate is somebody that 3 times a week goes to a bar and spend $100 in drinks, compared with another candidate that perhaps go to sleep at 8 o'clock and doesn't spend any money until the next day. Let's say you are somebody that likes to read a lot and spend a lot of money in books. And perhaps the other candidate is somebody that likes to instead, I don't know, do something else more frivolous. I don't know, like to spend money in, I don't know, something else. I don't know, different joints or something that in this template is considered, it takes points out. So now you see that you create a social score based on your spending habits. And this not by Visa, MasterCard, American Express to know about it. It's not like when you use a credit card. This is a real-time spending by the government. They're going to have a database in real time. They know exactly what to do, what you do with your money. Now, let's say they need to garnish your money from your check. They don't have to even ask for it. They just can just do a snap of finger, is a press of a keyboard, and now you're garnish the money from your paycheck. Let's say you don't pay your, I don't know, you get a lot of tickets with your car. Besides your social score going down, now they say, okay, that's it. We're going to take your money, you're going to pay these tickets. So you see, there is a lot of things that can go very, 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 very wrong with that. And hopefully we are going to avoid it. I would like to finish to play the clip and then we're going to move on.
And doing everything that we can to be on time and prepared to make this digital form of sovereign money available in the shortest possible time, which doesn't mean that it's going to be tomorrow, rest assured. And cash will always be there, and banks will be part of the game and will be intermediary in the process. But our duty is to make sure that as Europeans' preferences evolve over...
Banks must be intermediary. That's the scary part. Where you want to have that's the whole idea that defeats the crypto purpose, that you want to eliminate the third party, because the banks are the central part of it. They not only controls your money, but the government controls banks, and all the other way around, banks control even government. So that's the scary part, and that's unfortunate for Europe, really. And hopefully the people, they're gonna kind of realize where they're getting into it. So let's finish up. I think the clip is almost over.
Over the course of time, the digital euro is a possible reality.
Yeah, hopefully the digital euro, there is a reality, is a digital euro that doesn't restrain people from their freedom. That's the only hope I can have. So, but anyway, let's move on where we were saying, and let's show a little bit the evolution of this. Is actually a very nice clip that I like to play. Oh, it won't do it. That's unfortunate. Let's see if I can refresh it without losing it. What happened here? Okay. Finch, in the meantime, while I try to make this... Oh, there we go. So you see, it worked. While I was trying to make this graphic play, can you explain the main difference between the European stablecoin, centralized stablecoin, and the difference between the like a stablecoin like the Ripple USD stablecoin? Which are the main difference? Which is better, and why one is better than another? In the meantime, I'll try to play this one.
Let's break it down real clear for the audience while you're loading that graphic. So you've got three main categories you mentioned. One European stablecoins. 2. Centralized traditional stablecoins. 3. Ripple's RLUSD, a genius-compliant stablecoin. Here's the difference. European stablecoins, these are often regulated under MiCA, the EU's framework for crypto. They're required to have strict reserve rules, transparency, and sometimes even hold collateral in Euro or EU banks. Think of these as Euro native, but still largely centralized. They're built with regulatory compliance in mind, but can be limited in scope, less adoption outside Europe. Centralized stablecoins like USDT, Tether, and USDC, Circle. They're backed by reserves, but depending on the issuer, the level of transparency varies. Tether has had controversy over whether they had full cash reserves, while Circle provides more audits. They're not necessarily tied to banks or nations. They operate globally and have the most adoption in crypto. But, and this is the big catch, they don't operate under a standardized US framework, so regulators still see them as a bit gray. Ripple's RLUSD. This is the next-gen stablecoin. Why? Because it's being built from the ground up to be Genius Act compliant in the US. That means one-to-one cash backing, monthly third-party audits, immediate redemption guarantees, transparency, liquidity, and legal clarity. Plus, it's built on the XRP Ledger, so you get speed, low cost, and DeFi integration out of the box. Which is better? From a compliance and future-proof standpoint, RLUSD is better. It's designed to scale with US regulation, integrate into banks, and power DeFi at the same time. It has the benefits of stablecoins like USDC, but without the legal uncertainty. From an adoption and liquidity angle today, USDT and USDC still dominate. They're everywhere and they work, even if the legal structure isn't as clean. But long-term, when the US government or Wall Street starts demanding compliant stablecoins, Ripple's RLUSD is already built for that moment. Let me know when that graphic is ready. I'll tie this right back into the visual.
All right, so you see how this the XRP works. So this were on September 2024, and now look what happened here. Boom, and now look at that. Okay, that's the 20 crypto token by market cap by 2017 and 2025, at exclusion, of course, of Bitcoin and Ethereum and the stable coins. Okay, so if you guys understand where we are right now and how much XRP was compressed and was not able to perform as the way the coin that came out of nowhere like Solana, they were able to outperform for some years. XRP, just for the fact being that they were under a lawsuit, that there was also, the idea to keep XRP capped like that. So now, where is the price? While the camera, in the meantime, has frozen, let's go to the full screen right here, and let's take a look at this video. That's Finch. I'm gonna play a video where is the where is Charles Hoskinson, one of the founder of Cardano, talking about where is the price performing price of Cardano can be. And I would like to add, if you apply the same kind of idea to XRP, you're gonna have this, you can project where XRP can be as well. So let's take a listen. I'm gonna play the clip. All right, it's coming. Just a second, guy.
You think ADA will still outperform BTC in the future?
Of course, because how much farther can Bitcoin go? Maybe to 1 million. Okay, it's a 10x. ADA can go 100x, 1000x over this. It's like, guys, we're not a second-class citizen. Cardano does substantially more, and because of Bitcoin DeFi, it's going to end up probably being the yield layer of Bitcoin, and so it's going to get a huge halo effect from that. And because of the launch model of Midnight, partner chains are going to bring in airdrops almost annually to ADA. So you're like making the case for holding ADA. It's like, if you hold ADA, you're going to get Night tokens. Night could be a $10 billion product right out of the gate. And 50% of the supply is being allocated to ADA holders. And every year, these things are going to be dropping.
When does that airdrop happen?
The airdrop is the second half of the year. We'll have an announcement at Rare Evo about it. But that's like imminent. It's not like a hypothetical thing. It's like this year, and Midnight's launching this year. And every year, you know, these drops are coming. And when you hold ADA, you're going to get multiple revenue streams. You get the ADA yield, but then you also get all the other tokens that are managed inside the ecosystem, because ADA is a significantly better investment than Bitcoin. It's not me saying it's a fact. So here's some.
I know, guys, that's the thing that I want you to understand. Okay, there are so many projects that are very good. There's some projects that are shiny. Some projects that are more meant to be a fast money maker than others. Some as more like long-term investment. And so there is in crypto, there is a little bit for everybody. But also, guys, if you didn't get it yet, you planning to come to Rerivo, check in on crypto.com. We do have access to the Rerivo ticket page. You can get a discount. Is helping the channel as well with that. So let's listen to Charles again.
History that you might not be aware of. When the ADA crowd sale happened, we did it in yen, and the yen was converted to Bitcoin for auditability. So an audit report's actually coming out likely next month. It'll show the Bitcoin addresses for this, but at one time, I was one of the largest holders of Bitcoin in the world. We had 108,000 Bitcoin. So, you know, that's a lot of Bitcoin. But it's at $250, give or take, you know, depending on when it was purchased, because there were several tranches for it. Well, here's the thing. If you do the market valuation of that, what, 12, 13 billion, you know, it depends on the Bitcoin value of the day.
Yeah.
Well, if we just held the Bitcoin from the ADA sale, it'd be 12 billion. The market value of Cardano is 30 billion. So we outperformed Bitcoin by a factor of 2.8, give or take. So people are like, oh, you know, Bitcoin is such a better investment than all these other things. Well, EOS, absolutely, that's true. The only two around from that era are Ethereum and Cardano, where actually the network substantially outperformed Bitcoin, in this case by almost 300%.
Wait, what are the two? Cardano and what's the other one you said?
Ethereum.
And Ethereum, yeah.
Those are the only two. So that's just the fact, you know. So why don't you just convert all your ADA to Bitcoin? It's like, okay, so we can make less money as an
That's funny. So so you guys understand, you know, of course everybody starts to talking on their own way, and Charles is gonna be here at Rerivo, and yeah, they're probably gonna announce some big things coming up here. So again, if you guys are in town, definitely go check it out. Yeah. Let's take a look pretty briefly where we are right now. Things that doesn't look a little on the red. But overall, guys, really, so we have a Bitcoin is around the 118. We have Ethereum that touched the 4,000. Now it's down to the 3,800. It's a little less than that. BNB performing extraordinary. You know, I remember when I first think back on the days opened some... you know, there used to be Binance and there used to be BitConnect, if you guys remember, if you guys been around a little bit. You know, there was and Binance is like the Crow token. It used to be a few dollars. And the idea was if you were buying a BNB token and you will trade and using BNB, you will get like a discount on the trading fee. And some people accumulate a ton of BNB back on the days. And we're probably talking about 7 years ago. And look at where is the BNB token right now. It's $829. Imagine, guys, if you had just accumulated. Actually, if I remember right, each time you were referring somebody to open an account with Binance, if I don't remember wrong, they will give you some, I think the reward wasn't in cash, like in dollar, but I think if I don't remember wrong, there was in the BNB token. So, you know, you will get a 10, 15 BNB token. But back then it was, you know, it wasn't a lot. It was just a fraction of whatever it was. So, but imagine, for all the people that kept it, right now they will be very happy about it, no? Now we got Solana, 184, it just touched it to $200, down a little bit. Then we got the Doge Tron, kind of right there, Cardano. All right, so what about the Fair Ingredient Index? So we're right there. And what I like is this, that there is a big gap between, you know, the very greed like and extreme greed and where we are right now. So there is still room for the market to go up and grow. And without before we topping. And then the altcoin season, I think we are not there yet. Okay, we slightly touched it right there. You can see it. And then when we were, it was a little bit over, of course. Now we are 39 out of 100. I don't think we are there right now. I don't. Some people already calling the top of Bitcoin, and they say this cycle is pretty much has been topped. I don't believe so. I don't agree so. I think we are still have to see the effect of the tariff, the effect of the bill being signed by the president, and the effect also eventually of the Fed chair to cut rate. I think that's going to happen probably. I don't think they're going to cut a rate on the next Wednesday. Probably what I'll do, I just stream Jerome Powell talking. I'm just gonna put the stream for you guys to see it. So if you're not subscribed and you don't have the notification bell, now is the time to do it. Doesn't cost you anything. Support the channel. It helps the algorithm, and also it helps with the watch time hours. So if you guys want to do that, help the channel. Wednesday, I'm gonna set up the stream for you to see the Fed Jerome Powell talking about the rate, inflation, whatever. But like many other, I don't foresee a cut rate unless the slap the president gave it to Jerome when he gave it the building tour over there, kind of make it back to his sense. There was a funny clip. If you want to go take a look at the short, I make a short out of that. It was very funny. But I think everything is going to coincide by the September and the end of the year, where September is more likely that is going to be expected. I'll go August. Also, usually for stocks in general, is not one of the best months. So they usually everything start back in September, October. So I will say we have to wait. In the meantime, I think we still are in a consolidation phase. Who knows, I guess, right? Because everybody has a different opinion. People say they were already topped. And but I like to disagree. And so these are the top 100 coins performance over the 90 days. Where Pengus is up at 273%. But look at nice 39% for XRP holder. And if you kind of filter all the other stuff in there, there's perhaps some memes and other stuff that really I don't know what to do with. There are not many other projects out there, and the first top one that performed like XRP, if you were like a stable holder, and for something, for a project that does something particular that is as utility, okay? So from this list, H bar, excellent, XLM. I will point it out now that it came out very strong say, Ave. Okay, and yes, Hyperliquid. There will probably be some other project to keep an eye on them. You got Crow right there. That's what I was talking about. Crow is the same idea, 62% in 90 days. So that's where BTC stands. So if we were holding BTC instead, even like on auto performance, but also you have a lot less risk. Maybe you have a less return, but you have less risk, less volatility for what it is now. Okay, look at Cardano right here. It's only up 12-13% for the last 90 days. I think we didn't see Cardano perform yet. I think the Red Evo event is going to be some major news, and we're probably going to see Cardano skyrocket. And so no financial advice, but I definitely will keep an eye on Cardano and what it's about to do. If you are in the AI agent, virtual is performing very, very well. Although for tokenization right here on the bottom, I don't know if you can see it. I know it's cover. Where is it? I lost it. It was right here somewhere. Right here. So yeah, a lot to unpack for sure. Okay, Finch, you want to do a quick shout out to our people that are watching in this light event, light episode? It's like 9 o'clock here, Pacific. So for all the people that are watching in the East Coast and all around the world, thank you very much for being in. And perhaps, Finch, want to say hi and call to action and tell the people where they can find us and why they should watch Eye to Eye Crypto.
Absolutely. Hey, everybody. Whether you're tuning in from the East Coast, West Coast, or anywhere around the world, thank you for staying up with us tonight. You're watching I2AI Crypto, the home of the boldest XRP breakdowns and the deepest dives in digital assets. If you're feeling the energy, go ahead and smash that like button, subscribe to the channel, and don't forget to check out our gear at inoutcrypto.com. We're here live, often late, always fired up, and we break down what others won't touch. This is where crypto meets clarity and where the future of finance gets exposed.
All right, so there are some just a couple other videos I'd like to show you, and one is this about Ethereum. Let me pull this out. So here is pretty much the idea, guys, that they're gonna be create a company and a government creating a strategy reserve, not only with Bitcoin but with a bunch of basket of other, if you want, assets. Now the thing is this: everything does something different, and also you need to understand that the Bitcoin supply is shrinking down. Okay, we already passed the capacity of the miner what they can mine, so we are headed pretty much in a shock supply direction. So when the company won't be able to buy a Bitcoin anymore over the counter, so they need to go ahead and pay the whatever price that people start to selling for. If their people is going to start to sell, that's the thing. Every day there are companies that come out with something new. They say they are just we just put together $1 billion for buying this and that, and by eventually they're gonna come drive with Bitcoin and some other company. When the supply is gonna be extremely expensive, they're gonna move to other assets. And this is pretty much what the clip is going to talk about. Let's take a listen then.
What is the difference between using an Ether corporate treasury strategy versus Bitcoin?
Well, Michael Saylor's done a brilliant job with his particular implementation of the strategy. Being able to do some of the same things and many other things using Ether is actually much more powerful, because Ether is a productive and yielding asset. So we've been accumulating capital in various ways every single day. We've been instantly turning it into Ether and instantly staking it or restaking it, and we'll take advantage of decentralized finance yielding capabilities. And so we're able to take our Ether and grow it directly. And we believe that we'll be able to accumulate more Ether per fully diluted share much faster than any other Ethereum-based project, or certainly faster than the Bitcoin-based projects.
And it's not just Sharplink Gaming. You've got BitMine Immersion, BitDigital. All of these companies have been accumulating Ether in July.
Okay, the same things that you see now happening about Ether is the same things going to happen next with Solana, XRP, HBAR. They're already doing it. Ondo, SUED, and whatever you think that's the basket is going to be. Why they're going to do that? Why these people that went to buy Ethereum? Okay, this is the co-founder, so it doesn't really even doesn't count. But why? It's because that, if you have $1 billion and you need to buy Bitcoin $100,000, and now let's say get to $1 million, you're gonna buy less than just buying maybe Ethereum that is at $10,000, and you're gonna have more for the money. And the same is gonna be for XRP. If you can buy XRP for just $100, and you reserve for the same amount of money, you can multiply and now do your 50 and 100x. That's why it's part of the title. That's the whole idea behind this, creating a strategy reserve where they can make money. And again, it's gonna be a selected basket. They're probably gonna be some things they're gonna come and be part of it that will be less successful, I will say. But that's where we are headed for. And let's see, I think I do have another clip that I want to play. This is more about the okay, so where pretty much is compare a Bitcoin to the internet of money. So let's take a listen to this one as well. So let's take a listen. This is the founder of Coinbase in talking in a popular podcast.
I think December of 2010. I just happened to see it on this website called Hacker News, which like people just put out technical content. And it was describing how the world could have a currency that was decentralized. No country controlled it. No company controlled it. But it could be provably scarce, kind of like gold, where you couldn't just make more of it out of thin air. And you and I could have a peer-to-peer transaction with no intermediary in the middle, like a bank or credit card company or someone taking fees or being able to deplatform or debank one of us, or, and so if you could have a peer-to-peer cash system that was trusted because there was no government or kind of company that could go in there and manipulate it, I was immediately captivated by that. Like I had been reading like a lot of like Ayn Rand and some of these economists like Milton Friedman, these kind of free market guys and libertarian stuff, and the idea like really appealed to me, having seen how Argentina, like these people's lives had been destroyed by high inflation. I was working at Airbnb at that time, seeing how they were trying to move money to 190 countries all over the world, and it was completely broken and slow and high fees and delays. And so I read that Bitcoin white paper and I was like, that's a crazy idea. That's kind of like the internet or something. Mm-hmm. How do we have a global decentralized network for sharing information? The internet kicked that whole thing off. This was describing something kind of like the internet, but for moving value and money and all types of assets, and kind of like an internet of money or something. And so I just kind of couldn't stop thinking about it for like 6 months. I kept reading more and more, trying to get my hands on any kind of information I could find. And then
so you guys hear that's the CEO of Coinbase. Now there's gonna be a nice you see the concept. There's nice war beef with the banks. They try to charge money to onboard cash from your bank account to their platform. So that's gonna be something we're gonna see how it's gonna resolve. I guess that's gonna be kind of fortunate for some point, because we're gonna see these banks struggling, but eventually they need to give up. Okay, so that's okay. Give me a second, guys. I gotta go here. All right. So Finch, I think we came to the end of this episode. We wanna say give a appointment to next time, and make sure that people like to subscribe so you can watch us in our short and everything else.
Absolutely, Rocco. All right, folks, that wraps up tonight's episode of I2AI Crypto. If you had fun hanging with us and got value out of this XRP breakdown, make sure you hit that like button, smash subscribe, and turn on those notifications so you don't miss our next live stream. Catch our shorts, replays, and exclusive clips all right here on the channel. And hey, check out inoutcrypto.com for the latest XRP gear. And don't forget, the future of finance is already here. We'll see you next time.
Exactly like that. And until next time, ciao a tutti. Bye.